The weekend was pretty interesting because over the past 2 weeks, of course, we've had a million things happen. 2 Wednesdays ago was Liberation Day. A week after, it was undone, with one exception, China. Then this weekend, China went away. And they'll tell you, well, no, 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 later on we're going to put some tariffs, honest, no. They've basically signaled they're not serious. They're not going to be tough and strong and masculine and all that and hold firm. And so it's just like, we surrender. Up the white flag goes, which is why the market's doing so well, because the tariffs are really bad for them. I mean, it doesn't take a brain surgeon here. It's just like the tariffs went on, the market fell. They surrendered almost completely. The market went way up, and they surrendered utterly, and the market went up even more. And so we've got ES was up almost 100 earlier. What on earth? And I hope you're still with me. And it's green across the screen. So very interesting times we're living in. We got a bit of a late start today, so I'm going to jump right in because there's some charts I'd like to show you. And let's do that. We begin with a spider. And overall, we're at a very interesting level right now. I'm not going bananas, shorting everything with a ticker symbol, but I'm definitely out there selectively shorting things here and there that seem appropriate because we have rallied mightily from last Monday, thanks to this white flag being hoisted over the White House. And so very cool stuff going on. It's pretty consistently, there's more or less two levels. There's a lower level, which is anchored at Wednesday's high. And then in many cases, there's a little bit of a higher level, which is anchored to a gap. As it depends on how bold you want to be, you might consider taking a bearish position with either of those as a prospective stop. What's most intriguing to me, and this is the core of what I'm thinking now, is even with an utter rolling over surrender, we're not even as high as we were last Wednesday. And that to me is instructive, that through utter capitulation, it's not enough for the market, because what should happen is that the market should just blast over Wednesday's high. They should be like, we're completely done, yay, and up it goes to lifetime highs. No, it's not even mustered enough strength to match Wednesday's high. That's interesting. So having said that, that's why I came into the day pretty light, like 2/3 committed, but I'm pretty much 100% committed now. Not 170%, but getting there. So anyway, yeah, that's the spider. So there's sort of the Wednesday high, and then there's the gap up like so. The diamonds, zoom in here, kind of the same story. We're around about Wednesday's high. There's the gap up there. It's going to be a little bit, redundant because of the point I made, but it's an important point. And that metaphor that I came up with out of the blue about a hurricane last weekend holds true here. Where are the 2x4s? What can we do with them? So there's the Wednesday, and there's the gap. The small caps IWM, which is quite depressed, not in a psychological sense, but it's much weaker in terms of it was a more horrible drop, if you think it's horrible, and a more meager bounce. So same deal there. XLK technology. In this instance, we're right up here roundabout because we opened very, very strong this morning. We dipped for a little bit, and now we're kind of near the day's highs, but we're in the vicinity when it comes to tech stuff of Wednesday's peak. And then XLU, the utilities, which is a windmill I just keep tilting at. This one is quite strong, and we'll see if that stop holds or not. So that's kind of a whirlwind tour of some key ETFs. Overseas, from the perspective of the United States, here's some interesting ETFs as well. Emerging markets, EEM. Here's the gap. The price gap. I almost said stop loss, but I don't trade this. So here's the price gap right there. So we collapsed, and then we've retraced a huge chunk of that, and maybe there'll be a little bit more to retrace. Of more interest to me is the EFA, and you may recall that back on this day, I thought it was really interesting trade in terms of risk reward. The risk being pushing above this gap, which it didn't do, and the reward being a fall, which it did in spades. And I was castigating and self-flagellating with you ever since then because I didn't do it. It just collapsed without me. Maybe we get a second bite of this apple because we've got another much more pronounced gap here, which we have either sealed perfectly or come close to it. The gap itself is at 80.22. Yeah, 80.23 is the high for the day according to this data. So that's clean. So I have re-entered that position. And again, if we zip right past it, it probably won't go blasting higher. I think it's a pretty safe trade, whereas the prospect of a new tumble is the potential reward. So yeah, EFAs kind of come back to us. Japan, EWJ, also a nice clean gap here. There's just gaps all over the place with all the dynamism that we've seen. And one thing we hardly looked at all, but it's kind of an interesting creature unto itself, is Argentina, in as much as Elon was holding up their new government, which I don't fully disagree with. They have dogs in the cabinet, for goodness sake. I mean, I've got to be a fan. Argentina had been just blasting higher, up and up and up and up, and it peaked in January, and then it fell really hard. But just over the past few days, it has gone from this low, which erased many weeks of progress, went from this low, blasting higher, but check it out. Lower high. So lifetime high, lower high, lower high, lower high. So it'll be interesting to see if that remains as such. Plus, it's a spinning top. This is one of the coolest times in charting in years, really. There's all kinds of interesting things happening. XOP, oil and gas, up just a little bit. This thing, the top on this, how should we put this? Beat my fondest hopes, and we're kind of halfway recovered, and this thing is so damaged. I don't know if it'll muster enough strength to get back to that gap. I mean, there's the top there. From a distant perspective, you can see this is a very substantial top. We've had a handful of them. We've got one here and here and here. This one's way bigger than those others. And it expressed itself nicely in the span of just a few days with a really hard fall. And the question is, will we just cut right through that low we saw last week? Should things start to heat up again? I've been trading pretty well with one small exception, Apple. I jumped the gun on this. I entered a short position on this on Friday. Even before the surrender news this week, and I kind of realized, well, that was a mistake, because the safe place to short is way up here. And I doubled down on my screw up because I covered this morning lickety split, and it's been falling today. So, I mean, big deal. My position is usually about 5% tops of my portfolio, so it's not like it's devastating, but it still doesn't feel good to be in something that just I had no business being short. So I have no position in Apple. Shorting at the open of day wouldn't have been a bad idea because it had recovered quite nicely. But in any case, Apple is still up because of the aforementioned surrender. Amazon, interestingly, which I was already short, is down. Not only that, it's down pretty good, 1.33%. On a day when the NQ is up hundreds of points, I'll take it. And then Dell, in which I have no position, but this had fallen like crazy, and I'd wondered how many months it would be before a new opportunity came up. It kind of showed up already, because over the past few days, it's just roared higher. It's gone from 66 up to in the 80s. This is Dell. It's like a 35% increase in just a few days. A lot of volatility. So that may be presenting itself as yet another time to get bearish on Dell. A few other nice standouts. Like I say, I'm in a pretty cheerful mood in spite of all this green, because some of my lovingly selected stocks are behaving themselves very well. AppLovin, which I just drove. I didn't even know they were here in Palo Alto. I just drove by them this weekend. But AppLovin is down almost $13, so that's pretty cool. And I personally would cover if we can seal up this gap down here. Broadcom, I've re-entered Broadcom. I did not think I would say that because it had fallen so much, but the move higher has been explosive. And so I'm back in it. And in this instance, this is the stop level I would use. And Carvana, another example, not down tremendously, but it is down, which on a day like this is a good thing. And the stop loss is like so. So this it's a great time to be a chartist. It's a great time to be looking for those opportunities, because this is a very opportunity-rich environment. It's a very, very exciting time, and I'm just having a ball. I hope you are too. Gold miners continue to just thrive. I know some of you are big fans. You're doing great. We're blasting higher again on this. This is the junior miners. In contrast to this, well, it's not contrast because it's up too, but whereas I would not short miners myself, I have entered a short is XME, which is largely not precious metals. It has sealed up a gap very nicely there, and so I think that's an exceptionally clean trade, an XME short. We got such a late start. I was worried that I would run over, but we're going to nail this. Just a couple more for you. Here's Bitcoin, which is around about a little under 85,000 right now. I'm going to say the same thing. If and when the time ever comes that we break under the $73,500 zone, that will exacerbate any weakness in equities, even though Bitcoin's not an equity. And the last one, this cool little fella, is NQ. And I've tinted this for clarity, but those zones, those tinted zones, just represent different Fibonacci levels. And in this case, as we zoom in, the top of this, my color vocabulary is not extensive enough to describe it, but this light purple, I'll just call it. This is the level that I think represents strong resistance for the NQ. And we're in the vicinity of it now. And all this dash line is not a fib. It's simply a horizontal line anchored to last Wednesday's peak, just as a bit of a guide for us. So neither this, nor this, nor this are Fibonacci's. That's why they're dashed. I've tried to make them distinct. They're just important peaks on the way down.